Hello everyone, welcome to the channel, and as always please remember that this information is for educational purposes only and does not constitute investment advice. If you're copy trading, you are an absolute moron and you deserve to lose all your money and then some. So with that said out of the way, today we're going to talk about a stock called MYR Group, ticker MYRG. When you have the chart here on the screen, and what we can see right at the beginning is that this is a stock that year to date has performed quite sideways after the initial uptrend, the big gap that it had here in March. So this company engages in the development of infrastructure projects. So they're very involved in the renewables sector, but essentially they are a US-based holding company providing electrical construction services through a number of subsidiaries. So they have two segments: transmission and distribution. They design, engineer, procure, build, maintain, and repair on transmission and distribution network. And then the other one, they have a commercial and industrial segment that provides services such as the design, installation, maintenance, and repair of industrial wiring, and even the installation of bridges. So the majority of their business is based in the United States and Canada. And what we know about them is that in their latest earnings report on October 25th, they have EPS of $1.28 per share, and that was slightly below the consensus. So we can see the 25, they reported here there was a little bit of a drop, and the stock has recovered a little bit since. Now, the reasons why they allude that this was a problem was because there were some inefficiencies and supply chain disruptions with weather on certain projects, particularly solar. But a bright spot, and I think is quite significant here, is that on revenue they actually beat expectations, and that is certainly unusual in this earnings season. So if you go back to the overall market, the vast majority of companies were beating on earnings but missing on revenue. Many of these companies were in a position where they could just pass the inflation cost onto the consumer, so without necessarily selling more, they could make more money. Now, these guys here are in a different spot. So they miss on earnings, but they generate more revenue, and that is something that makes them different compared to many of the companies out there. So we have to ask ourselves the question if those factors that led them to miss on EPS are going to continue, because many of these project inefficiencies, they also cited labor costs are starting to dissipate. We have seen inflation starting to come down. The market is betting strongly now by the behavior of it that rate cuts are imminent, and I think that's what we can start seeing around this early November upward trend. But there's also other factors that I think are quite significant and why this stock has been recovering. I mean, it's getting close to the 134 mark where it had stayed sideways for a while. So we'll have to keep an eye for this level. At the moment, if you look at here, it bottomed at around 110, which is the resistance that it broke here. So that is quite consistent as well with my price target. Currently my price target is around 137, 140. We can see that here, and the next level after that would be at around 170. So we have a bit of upside here. In terms of downside, I would probably set up a stop loss maybe around 112, possibly around 120. So that gives you a very good risk reward. But coming back to the fundamentals, do we think that these headwinds that they mentioned are gonna persist? Personally, no, I don't think that's the case. We see improving inflation profiles. This stock, let's not forget, has been bolstered significantly since the introduction of the Inflation Reduction Act and all the government policies that are propping up construction and infrastructure development. And you can see that from the differential, the change in the PE. So if we look at here, around July this year, stock was selling at around 26 times, currently selling at 20. So that's definitely what we should be aiming for in this market, considering the stock. And also quite interesting as well is that despite it's been rising after that downtrend movement, I mean, is not massively oversold. So that suggests to me that there's still room to grow here. Looking at the analyst community, some analysts are favorable with their views, but they haven't lifted price target yet. And I think that could be something that changes in the near future. So we go here, the price target. Let's go to market beat. Let's have a look. What are the analysts saying? So we got 3 buys, consensus price target at 159, so there's room to grow. But what have they been doing? So Stifel reiterated the buy recently, set up the upgrade. So these brokerage houses, they're not very established, it's not Goldman or JP Morgan. It's certainly better, but the point here in this particular case is that there could be more analysts starting to upgrade the stock. That's something that we might see over the next few weeks. So we'll have to keep an eye for that. Now, you may remember as well the MTZ idea that we looked at earlier. And this would be a fantastic trade to have as a spread trade in between those two. So we go to trading view. Let's do MYRG on the long side, MTZ on the short side. You can see that this is an idea, or a spread, better said, that has been working quite well since September. So, bit of an uptrade here, stabilizing over here, and looks like it's starting to get some steam. So I think this is an idea that you can put on with relatively little risk. You have to obviously structure those limits and risk accordingly. But overall, this is a market that seems to be picking up. I've looked into the analyst community. I'm not going to get into the details on that now, but the perception or the market in electrical renewables like solar certainly is getting better, and many analysts are upgrading their views on that sector as well. So with that said, I think this is a trade that I'm going to put on my watch list, and if it plays out the way I think it is, certainly we can put that live. Watch for how the price moves from here. So you've seen that went under this 250-day SMA, retested again, and then it broke through that one and the 50-day too. And now if it breaks over here, we'll be getting very close to our price target. So it's really up to us whether we want to enter now or just wait a little bit and see. If it breaks over here, I think I would take that as a bullish signal. Just remember that we have to keep an eye for all the indicators. At the moment, it's not really very bearish on the RSI, so you could enter the trade with a tight stop loss. You can leave it for later, but there's different ways in which we can play this out. So earnings are gonna be in late February. So if we enter now, there's plenty of time for this idea to work out. If we have a bullish view, when that time comes, there might be some further room for the stock to keep growing up to that 170 mark. So somewhere around here, or potentially we could just play to retest that 150 level. So feel quite good about it. Hope you enjoyed the video. Subscribe and see you soon.